During this time, any improvement? I know you had a couple of days in a row where you couldn't. I'm hoping that you're able to. I've started the recording, so officially good evening and welcome out everyone to the Trading Foundations working sessions. This is for beginners. Meaning what? Meaning anything goes and nothing complex. We push that to the next one. So if someone wants to bring it up, I'll be like, yeah, sure, we can do that at the next block. Hey, Miguel, good to see you. Yeah, so what we were saying, and I wanted this heard, so I turned the recording on, is about stops and the Fed. And the fact that we don't want to tighten up so much that we end up getting picked off based on the volatility that is absolutely likely to come. If you have the ability, I'm going to suggest that tomorrow around, for me, it's noon, East Coast 2 p.m., Central Time 1 p.m., Pacific Time 11 a.m. You can go to the SPY. I actually prefer to go to the futures. So I go to the ES and I take it down to a 1 minute chart. 1 day, 1 minute. And you just watch the candles. And as it starts to get closer to the announcement, the candles start to just get bigger and bigger. You're like, oh, that's so big. I can't believe how big that candle is. And then the next candle's even bigger than that. You're like, oh my God. It's actually quite a phenomenon. And it'll go down, then up, then down, then up again. And you're just like, what? It's very unpredictable. Michael, oh yeah. Oh, that sucks. I wonder if he's tried changing audio inputs on settings. I'm going to just type that real quick and then I'll move on. Okay. Disclaimer, Cap. Yes. Disclaimer. We're not advisors. We're not brokers. No advice, no recommendations. Illustration, education only to the platform. Thanks for keeping me on track, Cap. We're off to the platform. Let's pop over. Okay. Let's talk about it. So the market finished flat. The futures are steady and slightly positive. Stocks hold steady as world awaits Fed decision. Fed rate cut decision risks investor angst. Will mortgage rates also ease alongside Fed cuts? Okay. That's the news. We know that to be the case. Here's our economic calendar. So tomorrow we have... I did that and it didn't work. No good. Okay. So tomorrow, housing starts, building permits, nobody cares. 2 o'clock. 2 o'clock Eastern. And then the market reacts, then settles down, and then as Powell starts speaking, it reacts again. There is no safe harbor. It's coming for you. Okay. Well, let's talk about this. Let's talk about this. Maybe. Let's talk about. I'm gonna relaunch that to update. Apparently. Let's talk about the market. SPY. Any trade adjustments? If you stayed in, Palantir, Amazon both hit their targets. Curious if anybody closed on those targets or near those targets or after those targets. Here's the market. You can see we finished up just ever so slightly. As you look at the way that we played this out, we gapped up, ran a little higher, and then fell off, and then stabilized that way the rest of the time. Yeah. We're bumping up against some resistance right now. I mean, so clearly up against this resistance right here. Stochastics rolling over. Now you might think, oh, Scott, it's a red candle, and we have potentially above average volume. We have 47.1 million versus 49.3. 49.3 divided by 49 point divided by 41.1. 43.3 divided by 41.1. Oh, it's 5%. Barely, but it's 5%. Does that mean we're going to score it bad for volume? No. No, because it was a flat day. It wasn't a down day. If it was down here, I would, but it's not. It's up here. Remember that red doesn't determine. It's got to be today's close versus yesterday's close. And with today versus yesterday, we were actually slightly positive. So, what else do we have going on? Well, this is a little bit of a problematic. This VIX is tough. It didn't close above the prior day's high, but it did definitely turn. Did anybody put a hedge on today? Yeah, I gotta tell you. I mean, this VIX definitely has me concerned. And the problem is, if you're gonna get a hedge on, you've got to beat the Fed announcement, right? We can't wait for the Fed because by the time we recognize that it's not going well from the Fed perspective, it's going to be probably too late. Okay. Let's talk about a hedge. So, where's my, I lost one of my platforms. Let me get this log back in real quickly. Okay, so what are you in? What did you do today? Any new trades? Any closed trades? Are you still holding everything? Give me a sense of what you're doing. I am going to log in. Did I already open it? I think I did. Yeah, okay. 63.37. So it's come back down a little bit. Holding closed one from a service. Okay. Yeah. Let me get this Oh, no, I did have it up. We talked about this yesterday a little bit. We're going to look at 3 possibilities for how we might trade this thing. Fourth by the 18th. No, sorry. What are we looking at here? These are a couple of different, we're going to talk about hedging. If you have a specific trade, we're going to go through and look at some of the ones that we've had on as part of our working session. We're going to look at a few that we're going to look at the things that we've had on. We're going to look at these hedges. Let me also look at the possibility of a spread. Let's try a 570, 565 bull spread. Let's see. We're going to buy 570, sell the 565. Okay. So we've got a couple of things to choose from here. That's not one of them. We need to buy. What was the strike price we used? Current price. Let's go 565 times 0.95. What is that? 5% out of the money. 595. That sounds right, doesn't it? $595. Wait a second. That's not right. What did I just do? 565 times 0.95 is... I divided it. I'm like, what the hell? That doesn't make any sense. Times 0.95. 565. 565. That's a little more reasonable. 5% out of the money. Oh, they are expensive, you guys. They are expensive. $964. And that's not even... Nope. 535. 275. Still expensive. Still way more expensive than what we're used to or what we want to pay for protective puts. But we just wanted to kind of express it, right? Like, okay, what would it look like? Let's isolate this. If I'm wrong, and I was going to get out of this trade, so this is just an SPY. I want to just get a sense of the contracts on this. I would definitely be wrong by, let's call it 570.5. Let's just use that for help. So I'll go into analyze, and I'm going to go 570.5. And 535, let's see. If I ended up with 3 of these contracts. So that's a hedge right there. Now, you can see even with 3 of these, and controlling my risk a pretty good amount, I'm still taking 450 of risk. They're a little bit more expensive than maybe some people are used to. So what can I do as an alternative? Let's start up here at the calendar. This is be ready to ask questions as they come, because I have to imagine that you're going to have questions. Okay. Where were we? Risk profile. single. Now, I'm out a week. I'm out, actually, yeah, I'm out one full week. I maybe want to even go just a couple extra days. 1, 2, that's the Friday. Now, where do I think this thing might fall if things got nasty? Let's go back to the SPY. At the very least, we'd think it's going to fall back here to 540. A little more aggressively, maybe down here to 522.5. So you can see that even at 540, I'm getting 3-1 on my money. I'm risking 5 to make 15. If I get more down to 520, that's when things really kick into my favor. So that's what I want to have by way of prospect. This isn't a speculative trade, but we still want to look at it and ask ourselves, do we think this has a good idea to move down? Well, the spit policy yeah, the policy with that is a little bit different as far as the amount of premium that we have to pay for it. So let's just look at that. We've got a single, then we've got a vertical. So look at the difference here. Now, I know I said beginner today, but because this is a hedge, I want to present all three, because even as a beginner, you have to decide if you're going to hedge, and if you do, what trade are you going to take, right? The easiest one to understand is the beginner trade. That's this one that we're on. You can see my check mark. That is what? Buying a put. I'm just buying a put. It's pretty simple. Time works against me, but if things fall fast, I should be okay. And you can see I could get 5-1, 9-1. Sorry, over 9-1 on my money. Okay, that's got plenty of prospects to it, right? But that's a pretty good drop. That's a full correction almost. 570 to 520, 50 points. That's almost 8.5%. So that would take quite a bit to get there. I wouldn't expect the whole trade to get there. I'd expect that I take some profit and then maybe I have one more position still on that I ride to that point. Okay, that's the single. Now, Clint. Yes, Clint. Clint had experience doing a debit spread that he put on in a hedge capacity. Am I getting the right person? I want to make sure that I got the right person. Let me know if not. Yes, thank you, Clint. So that would look something more like this. So you can see very similar. I make money as it drops. I lose money if it goes up, just like this. This works the same way. Make money, lose money. But if you notice, though, here, as long as it doesn't go up, I'm going to be fine. Looking at 555 by 545. Okay, so you're down a little ways. Let's see how that would look. Okay, what am I doing? Analyze trade. You said 555 by 545. Buy the 555, sell the 545, uncheck this box. Okay, now what you'll notice is it's really got to drop down there. So we're looking at two different things here. Here is a vertical. Let me take off this. That's one trade right there. But then we would have to decide, what do we do with it if it goes up? Right? You can see that here, if it goes up, this is what I don't like about it. You're negative on time decay. Right? And so it's anything above here is negative on time decay. The longer it takes to get there, the worse the trade is going to be. And I ideally don't want to put myself in that situation. If you look at the way I have mine built. Oh, that was mine. Let me see. 575, 560. Me as well. October 18. Me as well. I think that's plenty of time. October 18, 2024, 555 by 565. I'd almost feel better going this way. 565 by 555. Why? There we go. Wait, no. Now what I want you to notice is that over here, I'm close. I'm tucked in. I'm not out in this exposed time decay area. I'm really tucked into this right here. And our target, you don't even see one. That's max gain. The other one was 540. You'll see that that's actually pretty close to max gain as well. So if they had put it on and stick with it, they'd be looking fantastic. But what do we have now? Same kind of a situation. You have a put you can buy. You have a spread you can buy. Yeah, any of those things are reasonable in making that work. Let's go through the list. Actually, no, I'm not there yet. Let me go through the calendar spread. Do you have any questions about what we're doing here with these three types of trades? Okay. Okay. What I want you to notice is that even on this one where it says 540, we would never let this drop to 520. If it gets to 540, I'm so close to making all of my money that why would I not just stay with it all of a sudden? Okay, let's do one more just to make it a little bit more difficult. And let me see. %, even 80, Clint, even 80, right? Like that's it. If I got there, I'd be like, yeah, done here. The last one is a calendar spread. Now, what's the difference? I want you to notice that here, look at my Vega. It's negative. But if I do a calendar spread, it becomes more positive, right? Oh gosh, right? And that's the worst kind of burn. If you didn't see what he just said, he said that he's been burned trying to hold for more, and it's like, yeah, and that's the That's the absolute worst is getting burned when you had it. You had it and then you just didn't close the deal the way that you needed to. Okay. Now, this counter spread, you might be thinking, wait a second, we're here at 563.45. But we think it's going to drop. Yeah. So what do we do? Let's start with 540. Now that's our kind of our secondary target, right? So with that in mind, with that secondary target in mind, if the market drops, remember what's going to happen. So if the market drops, implied volatility is going to rise. Let's go look at the VIX. If the market drops, we'll likely go from a 17 possibly up to a 22. That's 5 points. Can I reflect that? Yes. Yes, I can. Most definitely I can. Okay. So what are we going to look for here? You'll notice that if I do this trade and the market goes up, I'm only risking a couple $100. If I do these other trades, now this is a different story over here. Let's go through this. Oh no, that's wrong. There we go. That's better. Okay. Let me get rid of this. Okay. Now. We want to look at just the calendar. And we're going to look at if implied volatility goes up. How do I do that? Right here with this cog. And I'm going to raise the volatility. Now, I want you to notice what's happening as I do this. I'm going to go all the way to 5%. Yeah. Okay. If you notice what's happening, it's pumping value in. Right? At your target, you're making $2,000. If I don't get that volatility, if it goes back to zero. Oh, wait a second. Did I go inverted? No. Oh, that's interest. Sorry, guys. It doesn't make... I'm jumping all over the place. $2,000 here. $2,600 here. So just that implied volatility provides for an extra $600 in profit. Where did that $600 come from? It came from the Vega. Look at the Vega. Your Vega is 237 times what? Times a minimum of 3%. Right? That's why we like knowing that. Okay. Yeah. So, questions about hedging. 3 different possibilities. Any questions about any one of those that we need to talk about before we move on and start looking at the watch list? Nothing. All right. Good enough. Good enough. We'll keep an eye on these. These are all interesting enough. I'm gonna lock them in. Yeah. I need to rewatch this video. Yeah. Yeah, I get it. I get it. So let's talk about these in margin requirements. There are no margin requirements. Now let's think about risk and number of contracts. If I did this, I would say yeah, I think that actually these numbers are okay. Yeah, I think we're going to just kind of leave these. What are the advantages? If I buy a single put, it moves fast. I make money quickly. I can't lose more than I put into the trade. Although these are all debit spreads. How would you decide amongst them? Let's talk about that. Here, I would probably do 3 of these. Now, what I want you to notice is I can make over $22,000 if it gets down to my target on this one. Not on this one. Not nearly as much. I just don't have as much potential, right? Yeah. So how would I decide? I want time on my side. If possible, when we get into these higher implied volatility scenarios, my target is 540 initially. Yeah, which is what? Just a little bit more than 5% only. It's not a big target initially, right? Okay. What do you guys think about that 540 target? If your target got worse, it would be fine. Now, how many of these calendars would I do? I'd probably be able to do 4 of these. Why the 9/26 date? I'm giving it a week. A week and change, right? I'm giving it until Friday of next week. And that's what I'm looking for. Right? Friday of next week. Making sure I have plenty of time. I'm gonna if we get I might put an alert for a hedge trade and just make sure I acknowledge that it is a hedge trade. But certainly that's part of what we're looking for, right? Okay, let's keep going. What's the best features of each of these? This trade here is theta positive. I make $9 a day. The longer I'm in, the better it gets. And it's vega positive, which means I make money as implied volatility goes up. So both of those things inevitably play in my favor. So that means that when it comes to the buying options, I'm simply choosing what I think are better options. Okay. That's the calendar. The vertical is also theta positive. It's also vega positive. No, it's not. It's theta positive, but less so. I want you to look. Less theta. It's vega negative, right? Very small, but vega negative. Okay. Questions about strikes, questions about dates, questions about Greeks. I locked these in so we can keep looking at these, right? We'll have the ability to keep looking at these, no problem. Okay. I wanted to make sure we spent a good amount of time on the hedge. I'm going to label this. Remember that what's causing the hedge is the higher low on the VIX. Right? A higher low on the VIX. This here relative to this here. Higher low. We've got that coupled with the Fed and what the Fed is doing. So those two things definitely have us, I think, exercising a good degree of caution, right? A good degree of caution. Okay. This is your chance. 5 weeks out in time. 5% out of the money with the call or with the puts to try to keep them a little bit cheaper. But the spread tends to keep those costs down a little bit more organically. And then when we consider a calendar spread, it just sort of opens everything up. Well, you guys are making it easy. That must mean it makes a lot of sense, right? Or it means we just need to keep talking about these specific trades this week. Which is your preference? Number 2. Why the 570? Let me go back and see what you mean. The 570, 565? That's just, I just like going $5 wide. I mean, there's really no specific rhyme or reason that we have to adhere to. Yeah. What's the difference between Vega and Theta? Vega, V, for volatility, tells us how sensitive are our trades to changes in implied volatility. So if Vega is positive and volatility goes up, you make money. If it goes down, you lose money. Theta is time decay. How much do we gain or lose for time? I want to be time positive and theta, which is theta positive and vega positive as well, if possible. Those are both very helpful to me in my trades. Okay. This one, remember that the calendar spread is around my target because this is what it looks like. This is where we are now. I want it down here. I want it to drop. So, yeah, that's the difference. Okay. Yeah, you know what? I'm just going to bring them up. We'll just talk about, don't let me forget. Don't let me forget. Tomorrow I can, we can talk about it. We can see as it goes. But if you're going to do it, you're probably going to be doing it pre-fed, right? Okay. All right. Well, that was a good chat. Takes us right to time for the first half. Let's take 5-minute break. Let's take a 5-minute break. When we come back, we're going to go through the watch list. We're going to see what trades we have on and what we want to do with anything, what trades we're thinking about, and then we'll go from there. The 570, 565, you're right, Clint. It has the least amount of work to do, right? That's what he's saying. Hey, if it just sits and sits and sits, that one will be fine. If it drops, that one. So there's pluses and minuses to each of them. Yeah. All right, let's take 5. I'm gonna get the slides put back up, stretch your legs, get a drink, use the bathroom, check back in 5 minutes. All right, let's get back to it. Let's get back to it. I have started the second recording, so now, good evening. Anyone new, or was it just the same group? You guys that come and just grind out the hour and a half, you're amazing. I commend you. Welcome to the Market Watch Group working sessions. Those of you listening from home, make it live next time. It's better. We want you here. This is the intermediate advanced session, although if you missed the beginning session, go back and watch. That was we talked about hedging, and we talked about a debit spread and a calendar spread as a potential hedge tool. That was a little more than beginner, but okay, we can handle it. We're all game for it here, right? Okay. Here are the disclaimers. Not advisors, not brokers, no advice, no recommendations. Yada, yada, yada. To the platform. All right, let's talk about it. Let us wax philosophically, if you will. Yes. Okay. I don't know why I can't get this. Oh, there we go. Sorry, it was distracting me for a minute there. Let's go through the watch list. If I get to something and you are in it or trading it, if you have a specific question about it, let me know. Sorry, I'm trying to get my layout here. Bob says he's trying to stay awake. Let's get to it then. Let's talk trading. That'll help. That will help. Let me minimize. Okay. Apple. I don't know, guys. I feel like that gap shook it, and it's now in a consolidation. Meaning it's got to break up and make a higher low from here. That's kind of how I'm feeling about this one. Aflac. So Aflac signaled on Friday, continuation here, pausing here. If you're in the Heiken Ashi, you're still just fine. Still just fine, right? Still able to enter this trade, theoretically, if someone wanted to, but Amazon. If you happen to stay in, boy, it got real close to that upper level today, but it's really starting to grind around that 187 level. It's crossed on the stochastics, so if you're still there, just, be careful what you're looking for. You should be on a pretty solid gain on that thing, so make sure you account for that. AXP. I didn't like the entry, but it sure did get a decent follow through. The entry was just too wide. Bank of America. Where's Steven? Is he here tonight? This is his dog right here. It looks like he's ready to run again, doesn't it? We just hit this support level after this high, coming out of this trend. Higher low, turning. I definitely think that has prospects, right? Anybody in this one or thinking about this one? Make sure you tell me when we get there. Closed your BAC today. Oh, okay. Oh, you were starting to run out of time. 9:20 expiration. BK, Bank New York Mellon. It's gotten 4 days. It's made moves. You got in Bank of America, Miguel, BAC, love it. BLDR just keeps on going. Starting to slow down here by the stochastics, but if you're in any industrials, you should have some pretty good profits. Don't give them back, right? Or at least not much. Obviously, you have to be willing to give some back if you stay in the trade. But don't be willing to give too much back. So there's profits here in BLDR or in Carrier or in Caterpillar. And we love industrials being strong to do as well. Fastenal. Still trying. I mean, you can see it's starting to hit this resistance level here. Stochastics is rolling over. Yeah, they've done their job. What more are you asking from them? If they've already done their job, what else are you going to ask from them? That's a question. Did we miss anything in there? CL. Ooh, what happened to our defensives? Still above the 50 and still above the old high, which is in this area here. So anywhere between 103 and 104 and change, which is right where we are. I'm definitely still looking at this one, especially if the market hiccups around the report. CMG, Sandy got her move. This was one she was in. I was in. Anyone else in this one? It's the day before the Fed. You've got some profits. You got to think about what you're going to do for taking them at this point, right? Yes, love it. Clint said yes. Costco. Okay. Costco's got a 2 days of pullback. Put it on the list. It just made a higher high. If it doesn't break below the 50 or this low and it stabilizes, I'd do it again. The Dow overextended. Yeah, we're starting to see some similarities in our patterns overall. Gold pulling back a little from its new high. I got to tell you guys, I didn't do this one, and I didn't like it because of how big this was. I don't love big entries. However, could I have, on the second day, taken this with a much tighter stop? I think I could have, right? Let's go back. If I'm in at, let's say, 46, today I'd be moving my stop to 46 and a quarter. I'd be up $1.50, and I'd have a stop loss at a profitable level. Yeah, I think we could have. Google, I'm still not sure it's done enough for me. I want a little more, a little closer to the 50. This thing just popped all the way back down almost to 6-month lows. Almost. 6-month lows is 146.08. We got down to 147.22. Goldman? No. If you're in it, you should be thinking about starting to peel some gains off and tighten stops. There's no reason for us to take undue levels of risk here. ICE. ICE looks fine. If you waited for this one, it actually looks a little better than NDAQ. NDAQ had a couple of good days, but then just sort of paused a little bit. Did anybody trade the ICE, or did you trade NDAQ, or neither? Do you have an exchange? Do you have an exchange stock on your portfolio right now? Yes. NDAQ. Bob said neither, but he's trading the Qs. Qs and the SPY. Okay, fair enough. Fair enough. Okay. IWM. IWM. Who looks better this week? The Dow or the small caps? 405 to 414. So we got about 15 points on a 40, or we got about 14 points on 200. Yeah, the IWM looks a little better, I think, actually. Oh, maybe we're seeing something coming. Maybe we're seeing something coming. JP Morgan. I don't love that it's below the 50. That's, other than that, I'd think about it. KKR. It's too late. Coca-Cola. A pause, if you will. A pause. The CL pulled back more than this. This one was just a pause. I'm fine with this, actually. Anybody in Coke? Let me know if you're in Coke. I'm actually fine with this and would take CL if it came. MasterCard overextended. Mickey Donald's is pulling back. Meta. If you traded on the hammer, well done. It's starting to hit some resistance up here. MMM. 3 M's. Looks good. Overall, but maybe starting to show some signs of weakness, of buyer fatigue. Morgan Stanley. I think Bank of America, if anything. Microsoft looks fantastic. Did anybody ride this one? I know Miguel was in it. Did you get out? Are you still riding this one? It's been great. Yeah. Still in. Be thinking about when you're taking them profits. Stochastics has rolled over. Bit of again, some buying fatigue there. Good trade though. Taking some good. NDAQ, it's well off the lows. I stuck with it. I'm gonna give it another day to see if we can regain. Still positive overall. Netflix looks good. Nvidia didn't do much. PGR didn't really give a signal, did it? Palantir hit its target. Palantir hit its target. Did anybody take profit at 37? That was my end game. So I'm done. Right? I want that end game. Hard, concrete. I asked for it. When I asked for it, let's all be a little honest with ourselves. It seemed like a lot, right? Were you skeptical? Like, I don't know. I don't know if it's going to get to 37. But then when it gets to 37, we're like, does it have more in it? I think to myself, if I ask my kids, like, hey, will you do these things for me? And they do it. I'm not thinking, Maybe I should ask for a little more. I'm thinking, damn, am I grateful I got what I got. Still holding one. I'm good with one. Right? There's always that like, hey, that one is where you could do something like a trail stop. Right? Like a trail stop. Jan 2026, if it's a trend trade, I could see it. Mine was a pure swing trade. I set an initial target. It got there. I took some profit. I set a primary target. It got there. I took the rest. Bingo, bango, whammo, bammo. I don't know what that means. Bingo, bango. Love it. Good profit. QQQ, RKT, RTX, SPY, looking a little bit overbought. I don't know. I don't know about Teslas. TSM. I like this. I can't draw. But imagine if I drew a line starting here and I just went slowly down. Slowly down. There's my consolidation. Then it busts right here. Decent volume. How decent? 12 million, 15. Yeah, right? 125%. Got up, new high, pull back. If it can hold above the 50 or even a little below, yeah, that's great. I'm in. I like that. Okay. UNP. All right. It's made a recovery. It's gotten beyond where it was. At this point, it's now in Heiken-Ashi mode. That's how I'm going to manage it. See if we can't get up there. See if we can't move the stop. See if I can't recover. End up with a profit on this thing. That would be fantastic. It definitely tried to shake. And if my posture wasn't as strong, I probably would have been shook. But because the posture helped hold on to it, still there. I'm still going. What else? USB. I like Bank of America better. UUP. That's just for reference. Yeah, UNP looks all right. Who's in UNP? That's a question. Who has any position in UNP right now? I still think there's a few of you that do. Bob does. Scott does. That's it. All right. Fair enough. Walmart. Walmart looks great. It looks great. We've set it free. We want it to come on back and give us an opportunity to trade into it. Yes. Yes. Okay. Okay. What else? Yeah, I'm adding that to the list. Let's go through the sectors, and then let's go look at Bank of America for a few minutes. XLB materials are up, but they're, overextended. A lot of overextended. That's where it's tough. Because you're like, it's overextended. But if we get what we want from the Fed, we could bust out and go. So be careful, right? Because you don't want to take all your profits and then have it bust out and be like, oh, shit, I should have stayed with it. At the same time, we also don't want to give everything back if things don't go the way that the market is hoping. Okay. Energy. How about this? Let's have a quick chat about this. What is your plan tomorrow? Are you going to hold through the Fed? Are you going to close in front of the Fed? Are you going to do a little bit of both? Holding. I love it. I love it. Yeah, we can't just bail. We can't just be like, oh, the Fed's coming. What are we going to do? We're holding. Right? We're holding. Okay. What else? If after the Fed it drops a certain percentage, then you'll get out of some. Yeah, give it a little bit of time to work itself out because it can make you feel like it's done picking and then all of a sudden figures out another way to go. So I would say definitely be careful about that as well. All right, let's go play with Bank of America. Would we put something new on? I'm thinking about it. I am thinking about it. I've got a nice Heikin-Ashi. I could go just a little below the prior day and then below this day for the next. So let's just go here. 38.79. We'll call it. We'll call it 38.65. So we've got 90 cents of risk. 38.65. Yeah, like 41.05 is about $1.50. That's not terrible for the first bit. And then, right, 1.5 to 1 for our take profit target. But from here, I think we could make a run, maybe not all the way to 44. 43.5. On 3 different days, it got there. Got the hiccup, sorry. 43.55. How's our vol look on this? It's kind of high, actually. It's not the highest. It's kind of high. I might actually think about a spread trade on this instead. Let's go. Let's go vertical. We think it might get all the way to 43. No, I don't like that. I don't really like that either. Yeah, I want to be a little more aggressive, I think. 40 by 43. That wasn't my target, was it? 43.55, I thought. 43.55. Gosh, you know what? I don't love the way this spread looks. I'm actually going to look at buying an option. Let me go back. Let's look at the $40 strike price. I think that might work out much better. Oh, it's definitely going to. Four contracts, about 250 of risk. Potential gain up near 4-1. Miguel, what did you do on this one? Out of curiosity. Yeah, I just don't like the way that spread looks. Maybe a bull put. 40 strike. Oh, look at that. Well done. Look at you. Very nice. Very nice. Yeah, I don't think the spread's going to do as well. I don't like it. I'm going to go with the option. Okay. I don't know. I'm my only reluctance is putting a trade on the day of the Fed, but I'm thinking about it. I'm thinking about it. This may come out. This may be a pre-Fed alert. I'm feeling bullish on the Fed. I mean, Miguel was only a day earlier than this anyways, right? So there you go. Give me your thoughts. Would you trade? Everyone's holding. Would you trade in front of the Fed? How about that question? The day of. Who would be willing to put a trade on in front of the Fed? Yeah, this will be an interesting one. Unlikely, Bob said. Fair enough. Clint's thinking about it. He's like, not necessarily opposed, but we'll see. Miguel's down. There's always something, right? There's always something that we're trading in front of. Has to make sense. Okay, so real quickly here. Oh man, I'm like losing my microphone block on my desk is coming off. It's crazy. Sorry, I'm about to lose it in my hand if I don't put this back up. Not going to the gym, got a date with Jer Bear. Jer Bear. Yes, I promise you, if you watch the announcement as it comes, it's fascinating. It's absolutely fascinating. Okay, well, listen. The floor is open. We've gone through our watch list. We've gone through our hedging. We've looked at trades we're in, talked about that. We've looked at trade possibilities. Here's what I see. either you're going to hold, if it's good news, there's not a lot of time to put anything on in between. You're either in it or you're watching it. So I like the answer of holds. I think we have a good position on that. Yeah. Anything we need to talk about that we didn't talk about, let me know. The floor is open. Hi on Kelly. Yeah, Miguel, I love it. Kelly is the number, right? That is the number. Here's a question for you guys. Do you feel like you're making the most of the bull run we're in right now? Did you hit it a little harder? Because the last time there were several people, myself included, who said, I felt like I could have traded a little bit more aggressively. Like I held back a little bit. And, if you made that assessment, then the question is, did you get more chips on the table this time? Did you go more aggressive this time? I definitely did. I most definitely did. Let me know if you were the same. And if so, I would imagine it's probably paying off. So, good. Long-term, Apple will trend up. AI will definitely help them. Dan, 100%. I agree with you. 100%. My thoughts, they will do a quarter. Some folks will be disappointed. Market will drop. Powell will speak, make everyone happy. Bam. That's a great prediction, Clint. Oh, I love that prediction. I second Clint's nomination. I second that. Anyone else? We'll have a quorum. All in favor? There it is. We have a quorum. And then some. PLTR, MSFT. Yeah, they've been fantastic. They've been fantastic. There's been some good ones. And that's exactly how it tends to behave around it. Like it's like, oh, it's not, oh, we don't like it. Oh, I don't know about this. And then Powell's like, listen, dummies. I like it. Here's what I'm going to try to do. Day trading's a nightmare. Oh my God. That's why I'm telling you, go watch the 1 minute chart starting about 5 minutes before. And then you can literally feel it. You're like, oh my God, I feel that. I can't, I'm going to try my very hardest to pop on chat tomorrow, right at around noon. I don't think I'll be able to get on like live on camera, but I'll be chatting. So yeah, you won't be able to type fast enough. If you're around, pop on and let's just like talk about it as it comes. Yeah. Let's informally meet up. I'll tell Glenn too. And Glenn will start at 1 or at 3 for the last hour anyway. So there you go. All right. Well, let's do that. Let's make that a plan. We'll call it for the night. Give you 5 minutes back. It's good to see everybody. SWAT training. Oh, I was going to say that sounds cool, but you're observing. Very nice. Have a great rest of your night, everyone. It's good to see you all. I will see you guys tomorrow morning, 9:15 a.m. for our midweek check-in. Then we'll meet up at 2:00 Eastern to talk about the Fed, and then Glenn will be there to wrap the day up. So, thanks, guys. Great to see you. Have a great night. As always, happy trading.